Hi friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, weekly stock market analysis show. We will look at what happened during the last week in the market and how we can plan for a better trade for the next upcoming week, right? And remember this analysis is for the week that is starting from April 11th, Monday 2022. So let's get into and see what the charts are saying. So look at the charts. This is the weekly charts of the Nifty and then Banknifty on the right side that you see, right? So you can see that's a small body looks more like an indecisive doji, right? Any small body is indecisive in the sense that it is not sure whether it has to go up, down or sideways. The market is waiting for a trigger to do the next action, but at the same time you can see that it is closed before the above the previous candle's high, right? Previous week's high, and also you have a gap up that happened on the Bank Nifty, right? And if you look at the daily charts, the last Friday is a bullish candle, and previous 3 days we had a pullback after a big rally of two big wide range candles that happened, both with a gap up, right? So basically it is a support zone nearby of that gap that happened, right, 5 days back, right? 5 to 6 days back, the two candles that gap. So it has taken that gap as a support and then tried to bounce up. So that is what exactly is a change in polarity that we can see in the both the indices, right? So it's powerful and it can go beyond the previous swing high, right? That's possible, right? So that is where we are on the indices on the daily charts. And another view of the Nifty and the Bank Nifty, if you see, you can see that it is comfortably above all the moving averages of 200, 150, 20, all it's comfortably above that, so it's clearly bullish. And also the Bank Nifty also it is clearly bullish, and also there is a slight slip down that has happened from the Fibonacci 61 retracement which was taken over a few days back. So it is still not climbed above that, but Bank Nifty it is still comfortably above the Fibonacci 61 as well as the gap support sets are also all intact. Gap is intact on the Bank Nifty also. So for the bands, what do they say? It still says that there is high volatility in the markets because of the bit between the median and the bands, right? It's more on both indices, so it continue to be volatile. At the same time, you can see there is a band that is temporarily paused the up move and then gone somewhat sideways. That is a contraction that's happening, but the upside band has already expanded. So considering that the price is above the median and the upside expansion that has happened on both indices, and it gives an indication that there can be further up move, right? And let's go back and summarize it. So 113 points we gained last week, right? It's 0.65% in Nifty, and we have an indecisive doji and still above, comfortably above the 20 weekly moving average. And there are plenty of supports around. We have seen that. And Bank Nifty, in the case, 1.5% gain happened. That's 585 points up is what has happened. And you have an indecisive doji in the Bank Nifty also on the weekly basis, right? And the latest candle we have seen, it's a bullish candle on the Friday. The change in polarity bounce it's happening, right? Well, the bands we have seen, it's highly volatile. And at the same time, there is a expansion which is slightly bent, but that indicates a price up move that can happen. Although there is a small pause that has happened in between, right? So let's get to the support and resistance zones, right? The resistance immediate that we can see is at 17,800 and 850. Above that you have 17,950 and 18,000 rounding number, and then above that 18,100, 18,200 and 18,350 and 18,400 is where the resistance levels on the upside. Downside the support would be 17,500, 17,600, which is Fibonacci 23 retracement from the lower swing. And then below that you have 17,350, 17,400, which is a good support, and below that 17,200 to 17,300, and then you have the gap support as well as surrounding 17,000 kind of supports. You can also see that it's a flag breakout that it happened and retracement has come in. And if the 17,000 is breached, then right you have 16,800, 16,900 Fibonacci 38 retracement level. So that's the support resistance level on the Nifty and the Bank Nifty. If you see, you can see that the immediate resistance is in at 37,700, 800 zones, and above that you have the 38,000 rounding number resistance, and above that 38,350, 38,500. So it's crucial to retain back that. And above that you have 39,000 range, 38,900, 39,100, which is also a major resistance. And above that we have a previous swing high, which is 39,500, 39,300, that range. So that's very important to clear that, because otherwise it will be a lower high pattern that may get formed. So 39,500 on the banking index, and retaining the 18,350, which is the previous swing high on the Nifty, is very crucial support and resistance level from the price action point of view. So making out of this level so that you can plan your entry and exit accordingly. So momentum and trend analysis, if you see, it's bullish momentum that you're seeing. The momentum is rising up, right? It's inches below the RSI 60. You can see that it's climbed back, but it's almost there on the bullish zones. You can see, right? Nifty Bank also same, the momentum is rising, right? Taken a dip and then still rising. So momentum is near to bullishness, but not almost there, right? If you don't necessarily need to always have a precise RSI 60 to be kept in mind, right? Sometimes a few points, 1 or 2 points here and there is okay. So it's almost in the bullish zones, you can say, and the momentum is rising upside on both the indices. But medium term, it is still in those charts of which is not put in here. Medium term, since it's a weekly candle, and you can see that for the weekly, the momentum is rising up, and but it's still sideways. Right? It's something you have to make a note of. And the trend indicator is the ADX. ADX indicator is showing that DMI positive is what dominating, which means that it's bullishness in the short term. And the weekly ADX indicator is also, the weekly charts are showing that it's bullish. It has crossed out the bullishness and it's remaining there. So the trend has overall changed in the medium and the short term, no doubt about that. The trend is overall it's rising in the short term, but it's having weak strength in the medium term. So that's what the trend indicators are showing. And so we saw about the momentum and the trend also, right? Now it comes to the volatility. Volatility was cooling off the last 2 weeks, and you can see that it's a 4-week further cool off that has happened, and it's settled at 17.68. That's big down move, considering that we had almost hit the 30 kind of levels when the Ukraine Russia crisis came in. So it's less than 20 is it's good that it's good for trading and good for overall it's good for the business and in the markets, but you have to be cautious, because it can always get back into that zones, spike back and mean revert. So volatility is always mean reverting. So it can always form a range at these levels and go back, or it can if things cools off, so the fear and greed index comes down, cools off further, it can go back to the 15 to 20 range or the 10 to 15 range. So you never know what happens. Depends on the fear that's present in the market, basically. So you have to be cautious about that, but it's good that it has cooled off below 20 and then trading becomes easier. Now open interest data, we'll be seeing the next slide, the charts for that, but you can see that it's a short covering on the futures open interest data that has happened, where short covering is basically bullish. So people who have gone short earlier had thinking of going in long. Right, so that's something bullishness that you can see from the open interest of the futures. And for the options open interest data, we'll be looking at April 13th, the weekly expiry. The put call ratios are 0.76 for the Nifty and the 0.78 for the Banknifty, which are not bullish enough but heading towards bullishness. If it is above 1, we can say it's bullishness. Last week it was above 1, right? So it has dipped a little bit but cooled off, but not bearish. Very close to bullishness, you can say, right? So put call ratio PCR and the futures open interest build up is also showing that there is bullishness ahead on the coming week. Now let's look at the support and resistance level for the April 13th expiry weekly of 2022. 17,000 and 18,500. The 1,500 point range is what the week is going to begin for. So remember that next week actually is very short week, right? You have a holidays that coming from Thursday expiries on a Wednesday, so you have 2 days. It's a very long weekend. Thursday, Friday, Saturday, and Sundays. It's a long weekend, so so effectively tomorrow would be so Monday, Tuesday, Wednesday is what 3 days of trading is going to happen. So it's very crucial that we can closely watch today's data also, right? So 17,000, 18,500 is what it says. So that volatility is expected by the option writers. So 17,000 maximum put riders and 18,500 maximum call riders. So the next level of support and resistance can be 17,600 to 18,000. So maximum put, second level of maximum put and call writing is put. Bank Nifty, you have 37,500 and 41,000 where the highest put and calls writing is seen. 37,000 and 38,000 where the second level of put and call writing has happened maximum. So that's the levels you have to keep a note of. Not much of unwinding has happened, except some call writing unwinding has happened. So it's not giving much of a clue, but from the levels of the operators of the options. But overall, you can see that the put call ratio and the short covering rally is indicating that there is bullishness levels. The levels are far away, right? So it does not give too much of a clue from the change in open interest also at this stage. But Monday would be crucial to watch this. Monday, end of the day, the open interest will be decisive for the expiry on the Wednesday. Sectorial watch, if you see IT sector has closed red. I think that is the only sector that closed red last week. Even the reality was closed flat, so 2.7% gone. So something is wrong with the IT. Probably it is near to the all-time high level. So, but it was a bearish weekly candle that happened. It's a fall off that has happened from the top, very close to the all-time high levels. Right? And metal is the shining star of several weeks now. It's 4.4% up again, and it broke out earlier. We know that so it closed green again now this week, right? And it forms a bullish candle, and the bullishness is seen on the daily as well as the weekly chart. So there is no doubt of no lack of confidence needed for taking long positions in the metal, right? But given that the market is still at a point of breaking out, you have to be slightly cautious with the tight stop loss, the necklines of the charts of the stocks that you are dealing with. Pick up the the best stocks in the sector, right? Not the weak stocks, right? When the momentum is bullish, pick some strong stocks and ride the rally, and then trail the straight the stop losses, right? So auto sector, you can see that also closed nearly 1.75%, and the thing is the sideways moment is what we see. It has not crossed into the bullish zone yet, so we'll have to wait for that to happen. And pharma is bullish in the short term. Pharma has moved up 2% again, and the medium term is sideways. So you may make long cautious positions, you can say, if you would like, but a confident entry would happen if this weekly also catches up. So pharma and metal is bullish. FMCG also bullish. Reality also maintaining the bullishness on the short term. Metal is maintaining them on both the indices, so it's a ready bet, means it's a confident bet. But pharma, FMCG, reality just maintains the bullishness, right? Because it is taking some more time for the weekly to catch up on that, right? So FMCG closed 4.3% up last week. Pharma moved, but reality was close flat. So to summarize, IT is not doing great. Metal is doing good. And auto is yet to catch up and get in the short-term bullishness yet, but other sectors of pharma, FMCG, and reality already in the bullishness and maintaining that. We'll have to keep a close watch whether it's slipping back or not. Right? With tight stop losses, you may enter, but be cautious that the weekly or the medium-term momentum is still sideways on these three sectors. So that's a wrap-up of the sectors. Yep, the charts of that is what you're seeing, what we talked about, right? The Nifty IT sector at a major resistance zone where it's really close to the all-time high. Below you have the metal, which is breaking out from a consolidation pattern, and auto also at a major resistance zone, and so after a big bounce it has had from the previous support zone down here. Pharma is breaking out and taking away the resistance that's there, and the bullishness is there, and except in the weekly. FMCG also green wide range bullish can be seen. Momentum is set to catch up into the bullish zones in the weekly, but rising up, and daily is already short term bullish. FMCG reality, a beautiful cup and handle pattern on the weekly. The momentum is almost there, and it's rising up on the weekly to catch up, but short term bullishness is clearly evident, and the channel breakout is happening. Although the last week was kind of flat, did not do much after the big bounce for 4 weeks that has happened. So that's the sectors and index heavyweights. If you come to that, HDFC Bank is where was the hero of the last week basically. The big breakout happened because of HDFC Bank and HDFC major merger, right? And but you can see that it has taken away the resistance. The last week ended up with a bearish wide range candle, right? Although the momentum has picked up and rising and all that, right? Trend has changed, everything is fine, but it it had substantially moved up to very high levels, but ended up with a bearish. So that may be because of the profit booking that happened. People who had been waiting to book profit on these two stocks for a long period of time might have found the opportunity and exited. Could be what that happened, or because of the uncertainty that may come in, that because of the merger and acquisition and all these things, right? People, some investors might have pulled back their money to take in the profits. HDFC also, you can see that it's an inverted hammer, very long wick that you can see. That's a selling pressure that's there from the top. Same with Banknifty, it's Nifty, HDFC Bank also. Coming to Reliance Industries, we know that it was a clear breakout of the cup and handle that has happened, but last week you're seeing a small body, almost like a hammer pattern, and the momentum slightly might have slipped into the sideways, but it's still bullish. It's a range shift that has happened, still bullish Netherlands. Until the neckline, there should not be any trouble till 24100 kind of levels, right? So that's where the neckline of the cup and handle pattern is, and it's a clear channel breakout also. So it may be a small pullback before taking a breather for the further up move. Index it's further. If you see Infosys, you can see that it is a red candle, just like the index is showing. It's a wide range bearish candle that is very close to the all-time high. So momentum is also slipped into the sideways right now. TCS is also showing a bearish candle. Remember that it had a good bounce of several weeks from the channel edge top downside, right? And momentum is in the sideways. It was resisting very close to bullishness and continues to be there. Remember, it has a resistance upside there and near to the 4,000 kind of levels from where it had slipped down since several weeks or months now. ICICI Bank showing very good strength, good volumes and momentum rising. Trend is crossing over to the bullishness, and candlestick pattern is taken out, showing that it has taken out the previous resistance and then moving further up towards the next resistance zone, right? So it's clear evident bullishness that you can see after the previous resistance has been taken out. Kodak Mahindra had showing a indecisiveness candle. Momentum is sideways, and remember it had attempted a bounce, but the below support zone where it had stayed for substantially long period of time shows that it may take more time to consolidate before it makes any big up move back to clear the resistance on the upside, right? That's index average. Institutional participation. If you see Fyers sold 6,300 crores in the cash market last week, but they had more 4,150 crores last. So it's not enough to so the villain is the Fyers who keeps selling. They had turned to few days of small buying last week, but you can see the figures that they had became sellers in the last 3 days for some reason. That's where the pullback happened, right? But they had turned into small buyers for several, almost a week, which gave hope to the market, but once again they had turned into sellers. The Fyers, foreign institutions, but domestic institutions continue to be supporting the markets from falling down. Global markets, if you see, the US markets were flat, mainly on the Dow Jones Index, if you see, and Nasdaq S&P 500 was showing bearishness, actually, not just flat. It's 1 to 3.5% of bearishness that was seen in the Nasdaq and the S&P 500. So US markets are jittery, and the shakiness there. You have to be cautious, because any bearish move back to the zones where So this is the Dow Jones, and this is the Nasdaq, and this is right side. Try to see it's S&P 500. So you can see that it had done a very good bounce from the support zones, and then after that there is some consolidation in this. So you can see same with the other indices on the Nasdaq also, the bounce and then consolidation, falling back to the support zone again. So you just have to be cautious whether it's going back to where it had broken out from or taken support and bounce from, right? So that's something you have to be cautious. Probably it's just a consolidation before a breather before it's moving further up. So that's your market, US markets, not very bullish at this point in time. Dollar index is, you can see that the charts of the dollar index is showing that it has taken out a major resistance of 99.6 last week. It's a wide range bullish candle, and then that's a major resistance that it had. It has spent multiple weeks at this point before taking out that, and that's happened, and now the next target will be above 100, right? So that's what it is heading towards. 103 kind of levels is for the next resistance zone. So dollar is strengthening basically, and USD INR, if you see that it had cooled off a little bit during the last 3-4 weeks after it had made the all-time high levels above 77 levels. But seems like last week was a bounce up that has happened from the support zone. Right. That means it's not ready to stay at the 75 below levels, and it wants to further move up. And that's what has happened. So 75.9 is still making the rupee very weak, and it's looks like the weak size shows that probably it's heading back to the all-time high level, which is not good for for that much good for our economy. Also, dollar strengthening too much and rupee weakening. Right? Crude oil, if you see it had cooled off a little bit, you can see that a big cool off has happened, and then thank God we are below the 100 levels, 97.32, and the momentum is still at the bullish zone. So, anytime you could climb back to the 13-year, 15-year kind of high levels back again. So but last week was a relief for the economy, in the sense that crude has cooled off. Now gold, if you see it, it is not ready to fall down from this zone, right, from the support zone, right, which it had conquered earlier, and then from where it had attempted a big breakout that failed very inches away from the very close to the all-time high levels, and seems like it was trying to move another 1% up last week. And that's what happened, and it's a green close with remember that the momentum is still in the bullish zones, and volumes are high, pattern is cup and handle, so anytime it can climb back there. Right, so gold is, as a commodity, is bullish, crude is cooled off, dollar is strengthening, rupee is weakening, US market is jittery, slightly bearish also. Right. So topics for the next week: Vauld Electronics is having a very good rounding pattern breakout, then a consolidation of multiple weeks, and then a breakout with a clear bullish handle with high volume, high bullish momentum, and the momentum and trend. So it's a clear pick for a swing or a positional trades. Vauld Electronics, public sector unit. ITC, the next stock, right? ITC is showing great momentum breakout on the weekly, and it is well within the channel, and it's giving a clear wide range bullish move, and it can give, just taken out a major resistance at the 267 level, kind of levels. If there is a price up move from the high of this weekly candle, then that could give a good up move towards the next resistance, the 300 kind of levels, 310 kind of level. So right, so that can give position as well as swing, as well as investment also. Right? It gives a high dividend yield of more than 4%, 4.5% or something. Right. So ITC is a swing for next week that may work out, and Vauld Electricals also could work out. Put the tight stop loss is very tight to the necklines of the breakout zones, right? And it may take some time. Sometimes ITC sometimes moves very slow, but it's a momentum breakout, so the move can be fast as well. So two stock picks. Another one is Nifty option trading strategy. This is again a double diagonal collateral spread. I often like to pick this because it always gives a good balance between the probability of profit pop and the max profit, and the risk reward and and the range. The risk reward range and the probability of profits matches very well in double diagonal collateral spreads. If you look for the weekly strategies, that's why this is picked, and this is giving a 74 point. So this basically what we are doing is we are selling for the coming weekly expiry 13th April 17,500 puts and 18,100 calls. Then we are taking hedge positions at 16,900 put and 18,500 call, and then the probability of profit is 75%, and although the max loss is showing big, it's not necessary that you hang on to the end, right? You should target for 2%, that's it, and come out of it, and then repeat it every week. That's what double diagonal collateral spreads are. This the range. Look at the range: 17,400 for 440 and 18,184. Right. So in case downside there is some fall that's happening or a breakout that's happening on the upside, just have to roll up and roll down. That means you just have to book the profit on the profitable side when the market is, which is the opposite side of where the market is moving. So book that and then roll down or roll down or roll up. That means you buy a similar, you sell a position which is closer towards the side where it has moved. So that's the adjustments that you do on the, just like how you do it on Air Condor or Ironfly or any non-directional strategies, right? So that's the pick. And to wrap up, markets have done a very good recovery of 15% more on Nifty and 20% more on the Banknifty, and there's very good supports on the downside and the major resistances, moving average confluences, everything is taken out and price patterns are bullish. Momentum change in priority has happened, momentum and trend cool off has happened, right? Momentum and trend crossovers have happened and big cool off has happened basically. The worry is that Fyers continue to sell, and therefore we have an indecisive dodgy pattern that is there, which is market is unclear. It may consolidate most likely, or it may crash. You never know. So it's not so there is a cautious bullishness, is my view, for the next week, right? Remember that the US markets are jittery, right? There is some uncertainty there. And you are seeing a dodging on a Dow Jones also, and now the markets are bearish. Other major indices like S&P 500 and Nasdaq. So use Fed inflation, Fed interest rate hikes and all this, along with the war crisis, is still hovering around there. So uncertainty can cause the VIX to rise back to the levels where we came from, right? It's possible. Crude oil is not that comfortable level. It's still very close to 100 and rupees weakening, right? So all of these factors are there hovering, so to be extremely cautious, although we are fallen below the 20 is what I would say. So the fact remains that we also had a slip down from the Fibonacci 61 retracement that has happened on the Banknifty. So hopefully it may pick up the momentum and then climb and conquer that back. But medium term, remember that 18,350 and 39,500 are the two levels you have to watch out for. As long as that is not cleared very soon, or as long as that's not cleared, it means that we are just forming another lower high, low, that kind of pattern. So I'll be cautious on that downs. Remember, we all medium term, we always have that M pattern threat, that is the double bottom, double top, right? So that is something that will be cautious. So overnight risk, at this kind of situation, global cues are and kind of uncertain. Overnight pushes, if you're taking, always take head positions, calendar spreads, vertical spreads, non-direction strategies, whatever. But have your risk defined, know what you will lose maximum, and put in only what you can afford to lose, right? So that's a wrap up. Cautious bullishness, what I have. So I hope this helps you to have your trade plans, in place for the next week, and if this market review that I had done for this on a weekly basis helps you in any way, consider hitting the like button and share to maximum. We have very few subscriptions, and I appreciate your help in this regard. Thanks for watching. Happy trading, happy learning.